Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have Chairman Dan Chicoine and Director of Investor Relations, Linda Kisa of Crescita Therapeutics. Crescita trades on the TSX under the symbol CTX and on the OTC under CRRTF. The company is trading at 80 cents with roughly 21 million shares outstanding, or about a $16.5 million market cap. I'd now like to hand it over to Paul Andriola.
Hey, great. Thanks, Trevor. Great to have both Dan and Linda with us today. Crescita Therapeutics, name we've certainly followed for quite a while. Lots of changes over the course of the last couple of years since we've been following you. I'm very happy to have you guys join us today. Dan, I understand you have a presentation, so what I'm going to do is just hand it over to you and let you go.
Thanks, Paul, and thanks, Trevor and Small Cap for having us, and I'll just open up the slide deck now. Can you all see that?
Perfectly.
Yes.
Okay, so thank you again, and for your interest in Crescita. So I think I'm going to basically share with you what I think is an incredible growth opportunity here for Crescita in the dermocosmetic market. Before I start, I have to do the normal legal stuff and warn everybody about forward-looking statements, and we also use non-IFRS measures, which increases the risk. So we recommend everyone goes to CDAR to look at our continuous disclosure documents. So Crescita is a unique Canadian dermatology company. There's not too many Canadian-focused dermatology companies. We are both in the dermocosmetics market and also in the prescription market. We're based in Quebec. We have about 70 employees, and in 2020 we had revenues of $15.6 million. So during this presentation, I'll go into more details about our strategy, some of our exciting assets, and how we plan to turn Crescita into a profitable dermatology company. We are a repositioned company. Basically, we used to lose money earlier in this around 2016-17, but now we have executed well and we are delivering profitability. There are basically four reasons we're a compelling investment story. We have a strong cash balance of $14 million with little debt, $1 million of convertible debt. We are very diversified. We have assets in a number of growing markets. We have a clear strategy. We want to leverage our balance sheet and our different assets to grow. And we have multiple growth catalysts that I think you'll see can help us sustain our growth and to continue to reach profitability on an ongoing basis. So we talked about a repositioned company and a compelling growth strategy with multiple drivers. So we'll talk about that and our clear path to success. So over the last 3 years, since we started in 16-17, we basically restructured the business. We brought in a new leadership team. We acquired some key assets. We acquired from a product line called Illyria from Sanofi. And we started to capitalize on Pliaglis. And we strengthened our balance sheet in 2018 and 20. And we secured also a line of credit. And we managed to get through the pandemic without too much damage. And now, we want to execute on our growth, get away from this pandemic, and use our cash and our assets to accelerate our sales and our profitability. So we're also unique in the sense that we're both in the RX market and non-RX market. We have 4 skincare brands, 3 that are sold in Canada and parts of Asia, and we have a dedicated brand for China called Dermisolene. On the RX market, we have FDA Health Canada approved product called Pliaglis, And we also have 2 late-stage development products that we are developing with partners in the United States called CTX-101, which is about to be submitted to the FDA for approval, and CTX-102, which is going into phase 2. We're partnered with a US-based company where we collect a percentage of the revenues from these assets. Most of the development investments are done by our partners, and we contributed our penetration technology, our patented technology for these formulations and helped to develop them. One of the advantages is that the screen's off, right? Linda, can you see the screen?
Yeah, it's kind of not, there you go.
There you go. Yep.
There you go.
Sorry about that. So all of our products are sort of aligned with what's going on in the dermocosmetic markets. Skincare spending is up, and people like millennials are aging, but they want more professional advice when they're trying to make selections as to what kind of products to use. So they are going to spas and to see dermatologists to look at what they should be using, which helps us because that's who we sell into. There is a growth in these minimally invasive procedures, and of course we have the aging population that's helping us grow our products. We continue also to grow internationally. We have a number of international partnerships around the globe. We have Taro in the US, and in Europe we have Cantabria, and we have 3 new licensing partners in Mexico, Austria, and China. As we mentioned, we not only sell in Canada, but also in South Korea and Malaysia, where we have distribution agreements, and we're trying to, of course, increase our international presence. We have a strong team. We have over 145 years of combined experience in the pharmaceutical and cosmetics industry. And I'm proud to say that we have quite a passionate group of dedicated employees and management at the company. As you can see from 2016, the performance has grown considerably in both sales, and we've reached profitability in the last 3 years. Our revenue is still lumpy as we get a significant portion of our revenues coming from upfronts and milestones, but our goal is to continue to increase our recurring revenue in all segments from the increased royalties, and we're growing our manufacturing services and increased sales from our dermal cosmetic business. So it's clear that, 2020 was a tough year for us. You can see from our revenue and reduced profitability with COVID, but we've adapted and we continue to see improvements in our business, and we think that over the next 12 months we'll be back to normal here with our product sales and revenues. We've also strengthened our balance sheet. You can see our debt went from $6 million, and the $3.3 million includes our leases, which was not included in the $6 million. If you look at real debt, it's about $1 million of convertible debt from $6 million, and that's all the debt that we have, and our cash is close to our market cap at $14 million. So we have a solid balance sheet. We have lots of liquidity between our line of credit and our cash. We have $17.4 million to spend, and we're looking for strategic acquisitions now to help advance the company, and that's part of our one of our big initiatives that we're working on. The second thing in our strategy is we have multiple drivers. So let's talk about some of those opportunities. First of all, we have Pliaglis, which has a number of countries around the world where we're not licensed. We are focusing to grow our medical aesthetics business in Canada in addition to our aesthetics business. As I mentioned, we're pursuing an M&A strategy. And then we have a number of other growth drivers that I'll touch upon that we think will drive our profitability and sales. So Pliaglis is one of our most important assets. It's approved by Health Canada and the FDA in a number of countries around the world. It's the highest concentration of lidocaine and tetracaine approved product that extends basically pain relief for up to 12 hours. It's used by dermatologists for superficial dermatological procedures like tattoo removals, if you have laser resurfacing, dermal filler injections, etc. So it goes on as a cream, and then it forms like a film, like a patch, and then you can remove it after 15 to 45 minutes, depending on how long you want to keep it on. And it's shown to be very, very efficacious in reducing pain from procedures. And it's also very easy to use. Our competitive products, once you put it on, you have to cover it with saran wrap and wait a long period of time before it has any efficacy. So it's a very efficient product. So we've shown in some of our deals that we can have some very lucrative partnerships with Taro. You can see the amount of revenue we've generated over the years in terms of royalties, as well as upfront payments. And we recently reacquired the worldwide rights from Galderma and relicensed part of it to 4 countries, to Cantabria Labs out of Spain. We still have 25 other countries left, and we hope to continue to sign deals in the future to drive revenues from this asset. So we're working hard. Our BD team is in discussions now with a number of other companies around the world to out-license the other countries. We also transferred the manufacturing rights to Cantabria from Galderma, so we have a strong supplier for the product, and we continue to grow in this area. We recently signed 3 other countries, as I mentioned: Austria, Mexico, and China. And they're all pretty much the same, these deals, where we get an upfront and milestones and royalties. And we're expecting to have launches in 5 countries over the next 2 to 3 years. And we also have China, which is not approved in China. So we're going through the approval process, and our partner is currently filing. And if it's approved in China, China could become one of our very important countries here, given their population and the demand for this product. So, as I mentioned, we have 18 other countries in the rest of the world where we are hoping to sign licensing deals in the upcoming few years. The second strategy is to grow our medical aesthetics business. So as we mentioned, this is a growing market. A lot of people are getting procedures done or getting professional treatments done. And for example, the dermal filler market is reaching 1.9 billion in the United States. And this is like a $190 million opportunity in Canada. And we are launching products in this market. We recently in-licensed from a company in France called Filmed 2 different products. One is called an NCTF, which is a new cellular treatment factor, and that's to revitalize the skin, and that is just launching now. They sell a lot of these products around the world. We're just launching in Canada now. And we also brought in from the same company some dermal fillers. There's 5 different varieties of that product, and that's being used in a growing market in Canada and in the rest of the world. We launched the NCTF product just a few months ago, very encouraging. Of course, where sales are lagging because of COVID, but the response from physicians was quite encouraging. So we're very excited about that. And we hope that by the time COVID, we can get these clinics opening again and people are starting to go and get these treatments, that this could be a very important product for us in Canada. The dermal fillers are currently waiting for approval from Health Canada, which should happen either in Q4 or in the first half of next year. And we'll be launching that through the dermatology market in Canadian market. So basically, we can leverage our Canadian sales force to launch these products in Canada. And we think that they're sufficiently differentiated that we see an increase in the number of medical accounts that we're reaching. And we're planning this launch as we speak. And we're growing both our sales force and our infrastructure to tap the medical market in a bigger way. Our third strategy is to leverage the cash we currently have. You know, we have 14 million. We, as I mentioned, we have $3.5 million product line of credit as well, and we're really looking to add a strategic business here to Crescita. And Serge is working very hard, our CEO, who has tremendous amount of experience in here since he was head of business development at Valiant Canada for a number of years. So we're looking for something that's in the aesthetic or medical aesthetic market that's going to, you know, basically be strategic and complementary. And so this is what we're working on now. And this should help tremendously to our profitability once we complete one of these acquisitions that we're working on. The other upsides that we have is that we are expanding our e-commerce platform for our aesthetic product line, Laboratoire Dr. Renaud, and that is a direct-to-consumer strategy that we never had in the past. And so we usually just sold into the spas, but now we are expanding, and that is strengthening our partnerships with our estheticians who do get some royalty revenue if their customers are buying directly from us, and that's helping that market. Our manufacturing services is underutilized, and we have a lot of capability there, and we continue to work with our business development group to try and add more customers, and we think that we will see a lot of growth there, which will help our profitability. Then finally, we have our two RX products. CTX-101 is in discussions now for out licensing. It's completed phase 3, and we think we will see some upfront and royalties from that product over the next couple of years. CTX-102 is going into phase 2, and that's a very unique product. Again, we think we will get some ongoing revenues in the future from both of those products as we move forward. So, you know, we have what we believe are a number of, I'll call it shots on goal here. We got a lot of upcoming revenue drivers that are happening. If you look at some of the milestones that are going to happen over the next few years, we've got the launches that are happening in Austria, France, Portugal, and Mexico. And we have new deals that we are working on that should be signed. We're going to be launching the NCTF and dermal fillers over the next 12 months. Hopefully, although it's never usually completely in our control, we can complete an acquisition. We are growing our dermal cosmetic sales in Canada, and our manufacturing services is also growing at the plant. So all of these things are going to help increase our sales and help us get to profitability on an ongoing basis. So just to summarize, we are a repositioned company with clear strategies and a lot of assets, diversified assets. We have lots of cash, and we have a number of revenue drivers that are happening over the next couple of years. And we think that we are a great investment opportunity. When you're trading for cash, there's not a lot of downside. And we think that you will see continued growth and profitability in the future, and hopefully an increase in our share price. So I'll be happy to answer any questions.
Perfect. Thank you, Dan. Thank you so much. A couple questions I have here. I'll start off with, well, so clearly there's two parts to your business. So I'll call it the RX side and the non-RX side. One is significantly more affected by COVID because it's, you know, you're selling this through sort of retail, you know, retail locations and things like that. Give us a sense of sort of a normalized year. What percentage would be RX? What percentage would be non-RX in terms of revenue?
Linda, you have to help me on that one.
Yeah, so typically, I mean, I think the bigger question is where will the out licensing fall? Because that's always the, I want to use the word wild card in our business, and the revenue has been we like to use the word lumpy, where when we sign really important deals, we can have a lot of significant upfronts. And so I want to say that's where more the focus is in terms of where we'll land as a total percentage. In terms of the skincare business, I can give more or less of a dollar value. This is in and around, on average, roughly, between $8 and $10 million.
And we have two product lines that sell pretty much exclusively into the medical and dermatology market, Illyria and Proderm. They tend to sell more in that market. So in terms of percentage, definitely more than 50% is in the spa market, and that's been greatly affected by COVID. A lot of the dermatologists are still open and allowed to be open, but unfortunately a lot of people are not going in for procedures unless it's very essential. So we're getting hit pretty hard on both of those markets in terms of skincare, both medical and non-medical.
Gotcha. Okay, well, let's stick a little bit more to the RX side. So, and I always pronounce this wrong, Pliagulous. You're gonna have to help me out here. I don't know why these names don't roll off the tongue here. You clearly you're continuing to out-license this product. You've got a lot of other parts of the world. How long is the patent good for? And how do you deal with the patent expiry, if at all? What does that all mean for this product?
Yeah, the new version of the product expires, I think it's 2031. So we, in the US, the product is not really big enough for someone to run trials and create a generic for this. We're not too worried about it. Taro is a generic company. They're not worried about it. And in Europe, it's not a reimbursed product. So for the generic, it's not very lucrative for them to try and launch a generic against a product that's not reimbursed. So we are not worried about that very much. So we have a lot of, in our discussions that right now that are ongoing with these 18 other countries that have taken approval on this product. We're not seeing a lot of pushback related to this. It's pretty much, they're confident that this product will have a long runway for the next 10 years.
And what do you see as sort of the peak sales potential of a product like this? What can it look like revenue-wise?
Yeah, we're not giving guidance on that one, Paul. It's very hard to predict. We have varying, depending on the country. We've only launched really commercially in a big way in 2 countries, Italy and the United States. And pricing is wildly different, as you can imagine, for these products. So we're not really giving guidance on that at this point.
Okay, fair enough. So you mentioned you're going to go direct to consumer with some of your products. How do you roll that out? Technically, how do you roll that out? And what if anything do you still need to do you think to sort of fill whatever sort of needs you have, either people or R&D of any kind, or I'm just thinking like marketing. What do you still need to do to accomplish what
we hired? We did brought in people who had a lot of experience with this. Recently, we launched earlier this year the e-commerce platform. We did do a lot of work in this area. So it's at an early stage, and we are doing a lot of social media work to try to get the visibility up on the product. And we're showing good success so far, but it's hard to know where this is all going to land. But it's definitely an additional area of revenue. And certainly during COVID, it's helping us, weather the storm. And Linda, you probably know more on that.
And if I could add to that, Dan, as you mentioned, I think on the e-commerce side and just kind of in terms of our digital footprint, it's really just in the infancy phases. It's an initiative that we accelerated at the onset of the pandemic about a year ago. And so since then, it's provided a nice incremental revenue in the last year. And we're really trying to feed that and invest in it significantly. And that's the approach that we're going to be taking going forward. Obviously, this doesn't happen overnight. So as Dan mentioned, we're bringing in additional manpower and talent on that front, and likely be making some strategic investments in e-commerce and direct marketing as well. And potentially, to expand that, not only right now it's sold in Canada only, but potentially to go outside of Canada as well.
Mm-hmm. Gotcha. I want to remind everybody that's listening, if you've got any questions you want me to ask, please use the chat function, and I'll do my best to ask the question. The company, the company's sitting on a lot of cash. You mentioned M&A. Are you going to stick to sort of the skin line or the skin products, dermatology products? Is that sort of the niche you want to stay within?
Yeah, we're going to stay in the derm space.
Yeah. And give us a sense of how do you guys, as a relatively small company, go out and source out things to look at? How does a company like you go out and find products that potentially license?
Well, we have a lot of expertise about in-licensing products inside the company with Serge's experience. So we go to the big bio conferences. We tap all of our like Bloom Burton helps us a lot with that, and we go to the Bloom Burton conference, the big bio conferences. We participate in all of those, and we have an in-house BD team that's focused on looking at products as far as acquisitions. We're using EY, for example, and other firms to help feed us with opportunities or companies that they know may be opportunities for us. And Serge does a lot of cold calling where he just, contacts companies and asks them to put for sale or if they'd like to merge with Crescita or et cetera. So there's a lot of those discussions.
One thing I noticed about you guys that doesn't really come through certainly in the financials, but you guys do have a fair bit of IP, like internal IP that you have, ownership of. Maybe let's talk a little bit about this. I remember my notes from the past. You've actually got some drug delivery technology. Clearly, obviously, you've got a lot of drugs that you have IP around. But maybe let's talk a little bit more about sort of your expertise in some of this IP.
Yeah, so we have an in-house R&D capability that I would say is very sophisticated for a company our size because of we were spun out of Nuvo Research, and that's what they did, and the technology that was at Nuvo came across. So we have what's called MMPE technology, which is multiplex molecular penetration enhancer patents that allows for better penetration of topical products into or through the skin. We have peel technology, which is what is used for Pliaglis, where you put on a product as a cream and it forms into a film, like call it a liquid patch if you like. And we are using some of this technology now in developing some non-RX products. So, but they were primarily used in the RX area before. So those delivery technologies, we've out-licensed some to the cannabinoid market, although it's not launched yet because of all the turmoil in the cannabinoid industry. But we do have some products that are waiting to be launched in that space, in that market, using our technology that would generate more oil.
No, another asset that you spoke to a little bit about, but you've got contract manufacturing operations that are not fully utilized. So you still got some capacity, you got revenue potential from that capacity. What do you do to try to increase the full utilization of that asset?
We have dedicated members of the BD team working strictly on getting more manufacturing inside our plant, and actually they've proven fairly successful recently. We've had good success here, and although it did stop a little bit during COVID because nobody was selling product, but it's picking up again, and we're quite optimistic about the future there and our ability to get some more contracts.
And who's your typical customer there? Like who comes to you for those services?
We have some US-based, fairly big companies in the skincare space. So that, and some local companies as well who are looking for manufacturing. So it's across North America and across different sizes of companies.
Mm-hmm. And maybe a rough idea, how long do you typically have contract terms with these type of companies? What does an order look like?
They're typically not long-term contracts. I mean, they typically just, they give you the contract for the manufacturing, and then they keep coming back. It's not like they will guarantee you business for 5 years sort of thing. I don't think we have too many of those, but they're relationship contracts or relationships where they keep coming back to you.
That's absolutely right, Dan. I think that the relationship and the trust is key in the CMO business. I mean, just the sheer fact for them to think to move, manufacturing is not an easy consideration, and so we definitely work really hard between our operations and BD team to properly manage those accounts.
The other thing, Paul, is that we have a full quality control R&D team, and we have 200 different formulations. So if someone's looking for a formulation that with their brand, their name on it, we can offer them a whole variety of different formulations where we can tweak it to fit their needs. And so it's quite an asset base to have.
And these formulations are somewhat sort of approved of some kind. There must be some sort of
yeah, most of these formulations don't really need formal approval. So some of them do, but they're typically not the norm. So yeah, they just, what we can do is change either the scent or some of the feel of each formulation, but we can develop it for them. So that's one of the assets we have that's not on the balance sheet.
Gotcha. I got a couple questions from a listener here in terms of Pliagis. Again, I'm going to butcher this name. I'll keep doing that. Sorry. But can it be prescribed for use at home?
Yes, it can be now. At least in the United States, it can be prescribed for in-home use. It used to be only at the doctor's office, but we had to do a study in the United States to get that removed.
Gotcha. Now, we talked a little bit before jumping on live here about Taro. We wanted to update investors on Taro. What can you tell us about the arrangement you have with Taro in the U.S.?
Yeah, so the Taro arrangement is, I think it's a royalty arrangement, and they supply their own product because they manufactured actually in Canada, in Brampton, at their Brampton plant. They have struggled with sales recently due to some COVID and reimbursement issues in the United States. I think we disclosed in the last quarter that they did not sell their minimum requirements. So we do have a minimum of $1 million US a year from them. And so right now they are revisiting their commercialization strategy, and we're waiting for them to get back to us. We don't know where this is going to lead, but at least we have some downside protection. And they also have an ability to terminate with 6 months notice, which would give us enough time to find another partner.
Right. Yeah, exactly. Perfect. Okay, back to Pliagis. I got a question that says, how are sales going in the US, and can you give us a sense of rate of growth?
Well, the sales are going down, as we mentioned in our last quarterly report. The sales, because of COVID and some reimbursement issues, have gone backwards in the United States. Right now, we have not received the first quarter was very poor in sales, and so we're not sure what's going to happen in the second quarter. They sent us the report at the 45 days after the quarter ended, so no one knows. So, it's not, we haven't disclosed exactly what the sales level are for that jurisdiction. So, and all I can say is that they're struggling right now.
Now, I mean, COVID's obviously affected that part of the business, but how about just the operations of the business? How has COVID affected your day-to-day running of the business?
Well, we did switch over to make some hand sanitizer. We became a business that could still be open. So we maintain our production for parts of COVID while we could, although the rest of the staff was working from home. That wasn't essential. And right now we are operating under, just like every other company, some people are working from home, some from the office, and we are maintaining all the procedures and policies to be as safe as possible. Linda, I'm not at the office, so I'll let Linda maybe comment.
Yeah, no, we're well, I spend half and half. So we're in Quebec again. We're approaching slowly the green. In our case, it's a green zone. So things are opening up, and but we're taking our precautions and making sure that all employees are safe, and there's social distancing protocol, disinfection protocols, making sure that we safeguard, of course, everyone, but specifically production facilities and the plant and all the folks down there that produce our products. And so, yeah, it's definitely something we take very seriously. Overall, though, as we had reported in Q1, although we've been challenged and we had a longer period of closure in Q1 of this year versus Q1 of last year, as you recall, the pandemic hit mostly at the tail end of the quarter. We did start to see an uptake in sales overall on the brand. So that was really encouraging. And we're hoping that will continue as, multiple provinces open up and
yeah. Okay, good. Let's ask a few questions around the actual stock. If I remember correctly, there's about 20.5 million shares outstanding. You guys do have an NCIB in place, a share buyback, if I'm not mistaken. And I see you've been using it, so you've been buying back some shares. But outside of that, what's the insider ownership percentage? And maybe give me a sense of who else owns the stock, if there's any institutions, anybody of significance. What can you tell us?
So the insider ownership is in and around 12%. I want to say the last reported number was about 11.7 to be exact. That's between management and the board. As you know, one of our larger shareholders still remains Knight Therapeutics, owning now a little under 10%. Another large shareholder, again, that's very well known is Bloom Burton Funds. So overall together owning, I still think right below 10%, Dan, right?
Yeah.
And then we do have a number of, I want to say larger funds that hold for retail investors, and the remainder are retail.
Mm-hmm.
Yes.
Okay.
You have a lot of high net worth individuals who own, I will say below 10% of shares. It's not widely held.
Yeah.
Really, which is a problem with liquidity, but
right. Now, you're barely trading above cash. I see a lot of assets here that you could probably sell off at significantly more than certainly what your enterprise value is. What do you think the market isn't getting, or where do you think the pushback is from the market right now? And maybe it's liquidity, it could be a whole bunch of different things, but what are your thoughts?
I think the people want to see us maintaining profitability without the upfronts and milestones, and sustainable profitability. Even though milestones and upfronts and sales milestones are going to be continually a part of our business in the next numbers of years, because all of these licensing agreements have milestones in them, and we'll continue signing new agreements. But notwithstanding all that, I think sustainability on the EBITDA level is going to be something that will give people more comfort. And I think people want to see what's going to happen with all of these out licensing agreements and new launches, CTX 101, 102, all of these things. To me, it's all upside, and like I said, I feel very comfortable with the shares I own because I only see those going up, and I don't see us going down on the EBITDA, sort of profitability level, not substantially. So it's just a question of how much upside do we have. We don't control what happens with these licensees once they have the product. We do have some minimums and some safeguards if they don't perform, but that takes time. So, but we're hopeful that we have a lot of launches going on, 5 launches going on soon. We have 18 other countries to license. We have our launches in Canada of NCTF and the dermal filler products. So, and then we have our contract manufacturing business that's growing, as well as the 2 RX products in the United States. So we have, like I said, a lot of shots on goal. Some of them are bound to go in and score. So we think there's upside on the stock.
Certainly, what we call lots of optionality. You've got a lot of things that just takes 1 or 2 of these things to work, and you get some pretty good upside.
We're diversified in terms of revenues. It's not like we have one big asset. We have multiple brands. We're in multiple markets in the derm space, multiple countries. So, we're well positioned.
Clearly. As investors, what should investors watch out for to sort of like what metrics, if anything, or what milestones should we be watching for to see that you guys are executing on your business plan?
I think EBITDA, obviously. EBITDA without milestones is a matrix that we are focused on somewhat. Also, the deals. How are we doing with the deals? So I think though that everybody's watching our profitability. That'll be some area. So hopefully we can get an acquisition done, and that will also help catapult that forward, if you wish. So there's all of those things are what we're trying to. Because I think if we start generating ongoing EBITDA, we should be trading at a high multiple of that, and we're nowhere near that.
Yeah, no, fair enough. And I mean, we're sort of about to wrap up here. Dan or Linda, is there a key message or a real, a takeaway that you want all our listeners here to walk away with? What if anything do you want them to remember Crescita for?
Yeah, I think for me, Paul, it's really the fact that there are really multiple growth drivers across a lot of really interesting and growing businesses. For us, obviously now it's really about execution. We definitely have the right assets, an excellent management team, and certainly we'll be working on, again, making sure that we have what we need operationally to properly execute. And that's what we're really focusing on here day in and day out, as well as on the M&A side. So as Dan mentioned, for me, a lot of upside with very little risk. And I think we just need a little bit more runway to be able to execute on these assets and optimizing these assets.
Yeah, I agree. I think COVID has set us back, definitely. But I think we'll be returning to pre-COVID revenues on our product sales and these launch. I mean, I think there's just a lot of opportunities here for us to grow and to be a nice, profitable dermatology company.
That's fantastic. Well, listen, thank you so much for joining us today. If somebody wanted more information, what's your website address?
Yeah, so it's www.crescitatherapeutics.com, and certainly they can look me up on LinkedIn or email me at lkisa@crescitatx.com.
Perfect. I want to take this opportunity to thank everybody, and thank you, Dan, and thank you, Linda, for joining us today. Great to catch up on Crescita. certainly comes across as a company that's undervalued, lots of optionality, lots of things on the go right now. So we wish you success and certainly look forward to catching up to you guys in the near future.
Thanks again for having us.
Thank you for having us.
Thank you so much.
All right. Take care. Bye-bye.